Transferring wealth successfully starts with asking yourself questions that will give your family a better life now and for generations to come. In this podcast, financial professionals John and Michael from Copper Beech Financial Group guide you through eye-opening questions to help you discover the truth about your wealth. Now, on to the show.
Hello and welcome to The Truth About Wealth with John and Michael Parise of Copper Beech Financial Group. John, what's going on?
Eric, doing well. How are you, sir?
I am doing fantastic. We got a chance to chat before we hit the record button today, and sounds like things are hopping in your world. Michael, what's going on with you?
Always.
Oh yeah, things are always hopping, as they say. It's nice weather these days. It's springtime, so weather's starting to get nice, and so That's always good.
Yeah, absolutely. And you also have a guest on the show today, and I don't think he's in studio. He's not quite local, is he?
No, I think we have Geoff Anandappa from Rare Tangible Assets Ltd. And Geoff, thank you for being here. But I think you're calling in from London today, if I understand it.
That's correct, Michael. I'm pleased to be here, and thank you for inviting me.
Yeah, no, we're excited to have you. This is we met Geoff probably I think a year ago, maybe a little longer than a year ago.
Yes.
At a conference that we both were speaking at, and I think what we're going to talk to Geoff about today, I think, is going to really interest our listeners based on what you do, Geoff, for Rare Tangible Assets. And collectibles is an asset class that many families are might be aware of, but typically don't include in their portfolio. So I really would love to have you kind of introduce your background, where you come from. I know you were with Stanley Gibbons for a good amount of years. So why don't you maybe start off and give a little bit of your background and how you got to where you are today?
Sure. Yeah, great. Thank you. As you mentioned, my company is called Rare Tangible Assets Ltd. I'm currently based in London, but I was actually born in Sri Lanka. And that's when I started collecting stamps as a hobby. My grandfather worked in the post office. He introduced me to collecting stamps. And when my family moved to the UK in the 1970s, I carried on collecting and then focused on British stamps, and it developed as a hobby. And as things happen, when I went on to university, started work, etc., my stamp collection fell by the wayside and I put it away for a number of years. But then I had a change in career, and I decided to try and work with stamps. I was by that time in my 40s, and I decided to try and work with stamps as a career. So I applied to Stanley Gibbons in London. Now, some of your listeners may know that Stanley Gibbons is the world's oldest stamp dealer, established in 1856. And so they're one of the key companies for stamp collectors. So I applied to them for a job, basically. And they, by sheer chance, were in the process of opening their new investment department. Now, Stanley Gibbons mainly deals with collectors, but the idea was that with the investment department that they aimed to promote rare stamps to high net worth clients as an investment. So I started out with Stanley Gibbons in 2005 at the very start of their investment department, and I ended up working with them for over 13 years. I traveled abroad, speaking at investment conferences in the US, in the Middle East, and Asia. In fact, I spent about a year working in Hong Kong, opening up Stanley Gibbons' Asia office there, and brought in investors, high net worth individuals who were interested in investing in rare stamps as a diversification from their main portfolio. And later on, it wasn't just stamps, but we were also promoting rare coins, first edition books, art, etc., into the portfolio as well. Now, my job with Stanley Gibbons ended in 2018, and I decided to start up my own company as a consultant. And as I mentioned before, the company is called Rare Tangible Assets Ltd, which kinds of, I think, summarizes what the company does. So it's real assets buying as an investment. And I'm not a dealer, so I don't sell these things myself, but I'm a consultant. And if you or your clients want to start up a collection or an investment portfolio in rare stamps, coins, art, first edition books, really the list is almost endless. I can advise people how to get started, how to build up a portfolio.
That's wonderful.
And also, obviously, later on, advise them on exit options as well. So, sorry, that was went on quite a bit, but that basically summarizes what I'm doing.
That's excellent.
Yeah, that's great. Thank you for that. And so this is, as I said at the beginning, a asset class that many people probably have heard of, but might not consider in the day-to-day investment type of world that they live in. So I'd love to hear a little bit about, what the asset class in general, how investors can look at it. How do you even get started with something like this? Because I would imagine other than working with you and kind of guiding them, it would really require a lot of upfront research to figure out how to even get started in something like this, I would imagine, right?
That's correct. And it is something you need advice on, unless you happen to be, an established collector in coins or stamps or books. It's very difficult to know how to get started, what to buy, how to buy, what prices to pay. And obviously there are lots and lots of forgeries, fakes in the collectibles business. So there are many different pitfalls. So you need to actually work with someone you can trust, either a dealer or an auction house or a collector who's already got a substantial collection for advice. But there are actually very few people who actually can give you advice on such a broad range of topics. I mean, there are, of course, coin dealers and stamp dealers who can tell you, what something might be worth and what to buy. But they often focus on their particular area. And of course, with a dealer, there's always a conflict of whether they're promoting their own stock or not. So that's why I have an advantage, because I'm independent. So I work with a number of dealers and auctioneers here in London, also in New York, in Asia, in Hong Kong, Singapore, etc. So I have a network of dealers and experts in many different areas, whether it's coins, stamps, books, art, vintage posters, etc. And I rely on some of their research. Obviously, I know a little bit about stamps and coins myself, and I know a little bit about different areas of tangible assets. I wouldn't call myself an expert by any means, but I do know where to reach experts, and I can advise clients on how to get started. I mean, generally, the best advice I would give people is, after you've done your research, is to buy at auction, because there you're buying at market price. When you're buying from a dealer, you always have to worry about what the dealer's margins are. And, you might get a good deal from a dealer, get a nice item, at a relatively good price. But then when you come to sell it, you might find that actually the dealer's margin has eaten away at most of the profit. So buying at selling at auction is generally what I advise clients. That's basically the route I favor. I obviously also have a number of clients. I work with about 200 clients around the world and manage portfolios totaling around $25 to $30 million. So I always have some clients who are in the process of selling their portfolios. So what I can then do is actually introduce them to new clients who may be willing to buy their items. And that way we can bypass the dealer and the auctioneer, and the clients can deal with each other with my advice. And I actually only take a very small commission. So my commission is 1% of the trade value. Typically dealers will take 20, 30, 40, 50%. So 1% is actually very small. So this way, clients are saving themselves, a significant chunk of commission going to a dealer. And as I said, that's another way of buying stamps or coins. But generally, I think auction is probably the best way to buy.
Hey, Geoff, this is John. Our clients are always interested in returns. They always look at investing for benefit of return, obviously. Talk about the returns on some of these types of assets you deal with. I know inflation is a factor today. I'm assuming, or maybe I'm wrong, that people are now looking at this type of an asset class to hedge the inflation issue that's addressing the world. Did you find that to be the case?
Yeah, that's correct, John. And traditionally, real assets, going back to the high inflationary periods of the 1970s and 1980s, real assets have been used as a hedge against inflation because they go up in parallel with inflation, sometimes even exceeding inflation as well. So there is definitely increased demand for these type of assets. The other factor is that these are actually totally uncorrelated with mainstream investments,
Correct, yeah.
which most of your clients have. I'm assuming that most of their investments would be tied to the stock markets in some way. Real assets are much more stable, and then they don't go up and down with the stock market or gold or the US dollar, simply because these assets, the value is driven by collectors, not by investors. A classic example is the 2008-2009 financial crisis, when prices for equities, gold, property all fell in value for a while. Now collectibles didn't. Because if you think about a stamp collector who's been collecting, for 20 or 30 or 40 years, when the stock market falls, they're not going to suddenly rush out and try and sell their stamp collection to raise more money.
Sure.
Right. In fact, completely the opposite. Many of these collections, last for many decades, and it turns out that many investors won't actually sell. Many collections get passed through generations as a family heirloom, if you like, and that's actually the best way to collect. They work great as long-term investments, passing through the family, passing wealth through generations as well. Going back to something you mentioned about returns, I don't talk about returns mainly because the reason for investing is these type of assets is not about the return. It is about diversification. So, you may only get a return of 2% per annum or 3% per annum, or, it may even stay flat for a decade. But the key thing is that when there's chaos in the markets, it's something you may be able to turn to raise some money, which sell an asset which actually hasn't fallen in value, and that's really where these type of assets become valuable, purely as a diversification. And we're not talking about huge amounts in this. I generally don't advise clients to put more than about 2 to 5% of their total investment portfolio in these type of assets. So we're talking about a very small amount, something that you can hold on for a long time. And these are not liquid investments, so you have to take your time when you come to sell them. If you have a stamp or a coin worth $100,000, you're not going to find a buyer for that overnight. It may take weeks, months, maybe even a couple of years to find the right buyer who's willing to pay the right price for these things. So it's not something you can flip, on a day-to-day basis. These are long-term investments which you want to hold, really, ideally through generations, I would say.
Yeah, Geoff, I mean, from this conversation, this is great. But what I look to you as being, you're just, so I view it as eliminating the barriers to entry to entering this space, because for myself, I mean, maybe if we're talking about rare guitars, I might have a little bit of knowledge about that. But as it relates to stamps or coins, I do not have knowledge. So if I want to even get into this space, I need to rely on somebody like you to be able to help with that. So I think this is a really valuable role that you're playing. So I want to commend you for that. The other question I had is, what's the size? I mean, is there any data on the size of the market in terms of how many, as an example, stamp collectors are out there? I mean, if you have a company like Stanley Gibbons that's been around for 150 some odd years, it's got to be a pretty big market, I would think, all things considered.
Yeah, I think it is a big market, but it's very difficult to measure. So if you think most of these trades happen on a one-to-one basis via stamp dealers or through auctions or through eBay. Very, very difficult to measure it. What I would say, there are tens, perhaps hundreds of millions of stamp collectors worldwide. The other thing I would say is that most people have a perception that stamp collecting is a dying hobby. And that's true to a certain extent in North America and Europe. The number of stamp collectors like me is falling. However, probably 2/3 of the world's stamp collectors are actually in Asia. It's estimated that 1/3 of the world's stamp collectors are in China, and they're all very young. They're kids, people in their teens, working adults. And you see this when you go to stamp shows in China or Hong Kong. Most of the collectors there are very, very young. And of course, they're not paying thousands of dollars for stamps when they're buying them. They're paying, $5 or $10 at a time, but the numbers do add up.
Sure.
And the thing that's driven the market in Asia is the internet and personal credit cards. So if you have an internet connection and a credit card, you can buy a stamp from anywhere around the world. And that's what's driven the market for these things around the world. And the same applies to countries like Indonesia, India. There's a huge market for stamp collectors in India. In India, stamp collecting is almost seen as a respectable professional, a hobby that professionals might get into. And the prices for stamps, Indian stamps, have boomed in recent years. So yeah, very, very difficult to measure the size of the market. You can get some estimates from eBay, where stamps are one of the, I think they're in the top 5 of the categories that sell, but very difficult to get data on the number of collectors or the value of the trades. I do have indices tracking British stamps and English coins and some other assets, which I have compiled data going back 20, 25 years using catalogs. And that gives you some indication how prices have varied over the last 25 years. But really, that only gives you a snapshot. I mean, each individual stamps from a particular country will vary from, stamps from other countries. So English coins may be very different from US coins or Middle Eastern coins, etc. So difficult to measure, but I do have some indices which help to track these kind of markets, or at least give you a general picture anyway.
Geoff, you also mentioned posters, artwork, coins. I mean, talk a little bit about that sector of your markets. Is that I know artwork's always been a very interesting asset class. I think there's a group called Masterworks out of New York. I think they're out of New York, and it seems to be popular. Can you want to talk about that a little bit?
Sure. Yeah. So art is something I got into a little bit later on, after stamps and so on, but it does interest me a lot. And art is probably something that's actually owned by many of your clients, the families you have, and they may regard it as something, a lovely piece of art to hang on their walls and maybe, pass through the generations. They may not even regard it as an investment, but it obviously does have value. Now, I focus on established artists like, Picasso, Warhol, Lichtenstein, etc. Now, you can obviously buy original paintings by these artists, but many of those paintings go for tens of millions, hundreds of millions of dollars, which frankly is out of reach of most of my clients and probably all of my clients. So I focus on what are called limited edition prints, limited editions done by these artists. So these artists would reproduce some of their works in an edition of 100 prints or 200 prints, all signed and numbered by the artists. The advantage is that these are, prints by, or editions they're called, by well-known artists. But also you can track their values much more easily because these editions appear on the auction market once or twice a year. So you can track their values and they're much more affordable as well. So I have a client who bought a limited edition Picasso print for $20,000, whereas the original would have cost many, many hundreds of millions. So these make them much more affordable. And you can actually hang them in their own home. So I have editions which I bought as well. I'm sitting right next to a Damien Hirst edition, which I bought a few years ago, and I have a few others. And then there are similar things you can buy. I'm also very keen on vintage posters, which are similar in that they are also artwork. So these are posters which are used in movie theaters. Going back into the 60s, 50s, and even earlier. And I just love these because they're huge pieces of art.
Yeah, they're great.
You can hang on their wall. Yeah, they're very attractive. And I actually got into this fairly late on, but actually I bought one or two. I bought a James Bond poster, the first poster for Dr. No, which came out in 1962. There are only a couple of hundred of these in really nice condition, and it's a very attractive poster, which I bought it for £7,500. I bought it in London. I had it for about 6 years. And then about 18 months ago, I decided to sell it because the bond market had really taken off. And I ended up selling it for £18,000. So made a very good profit on that. And this is another example of, this is when I needed to raise money for setting up my company. And this is at the time when the COVID pandemic had just hit.
COVID? What's COVID?
Yeah, hopefully we can forget about that.
And the markets were in chaos. I didn't know whether to buy or sell my existing investments in the stock market. So I went to a dealer and I said, look, I need to raise some money. Can you sell this for me? Took a couple of months to sell, but I sold it for a good price. So that's a perfect example of when I needed funds and the markets were in chaos. I used an asset which I already have to raise money for when I needed it.
Yeah, Geoff, I mean, the liquidity risk is definitely something that you touched on earlier. And then just in this story you told, at least, it took a couple months to be able to sell it. You mentioned forgeries at the beginning. How much of a risk is that? And I would imagine it's why people are working with you to be able to suss through that, right? I'm sure you come across a lot of things that end up as being forgeries really at the end of the day. Can you explain a little bit of maybe the process around,
Sure.
how do people avoid that?
Yeah. Well, I think if you're buying from a reputable dealer or auctioneer, you can avoid forgeries. And many of these dealers and auctioneers have a money back guarantee, at least for a certain period of time, if you buy something from them and it ends up being forgery. Actually, outright forgeries are pretty rare when it comes to collectibles. Much more common are what I would call fakes, or something which has been damaged and then repaired so that the repair is not visible to the naked eye.
Okay.
And this is quite common with stamps, and also to a certain extent with coins, etc. as well. So yes, you do have to work with people you can trust. And as I said, I'm not an expert in these things. I can tell you for a certain amount of forgeries in stamps and coins, I can tell you, but I rely on experts, and you can get certifications from independent bodies as well. So when I'm advising clients to buy a rare coin, for example, I advise them to buy coins which are actually already slabbed and graded and independently authenticated by a third party. That way, you have an assurance that what you're buying is genuine and not being tampered with. But it's true; it is something you do need to be careful of. I would say actually the main danger, though, it's not really fakes and forgeries. It's buying at the wrong price. So, that the bond post I bought it from a dealer simply because it's someone I knew. However, the most posters don't go up like that in value in such a short period of time. And if I had tried to sell it the following year, put it into an auction, I would have probably lost 25, 30, 40% of my investment. So if you're buying something, you have to be sure you're buying it at the right price for the right reasons. And that you have to hold it for a while before you can get your money back or make a profit on it. So the bond, it's a good story, but it's not typical of buying and selling collectibles.
Hey, Geoff, are there any emerging collectibles that you see that's new to the marketplace? Is there something that you're tracking?
Sure. I mean, there are always, as unlimited number of collectibles. You probably heard about trading cards, Pokemon cards, video games, computer games. That's
NFTs,
which is booming. Yeah. To be honest, there's too much for me to track. I'm only one guy and I have a very small company. So I kind of focus on the areas I know. And, I think, Michael, you mentioned you're a fan of guitars. And again, one of my nephews is really into music and he collects these, I think he calls them amplifiers going back from the 50s. And perhaps
Michael's got a couple of those.
Yeah. Right. And he tells me they're great investments and I believe him, but I just don't have the time and the resources to track stuff like that. So I tend to focus mostly on rare stamps, ancient coins, and I don't promote US coins simply because there are many US dealers you can go to. I actually promote English and European coins and Asian coins, also first edition books, art, as I mentioned, the limited edition prints, vintage posters, and then to a certain extent, I have people who work with me on luxury watches, whiskey and spirits, those kind of investments as well. So for most of my clients, that's probably about enough to get started. That would give you a pretty decent diversified portfolio if you invested in 2 or 3 of those things.
Yeah, that's really great. Geoff, is there anything we haven't covered that you think is really important for our listeners to know about what you do or this asset class in general?
I think we pretty much covered everything. I would say, there's always questions that come up. So I have a brochure. I mean, if people are more interested, they can reach out to me. As I mentioned, my company is Rare Tangible Assets Limited. I should probably mention my fee structure. I mentioned that I'm not a dealer. I'm a consultant. So I don't sell things directly myself. And I don't charge clients commission either. So I work on a subscription fee, which is payable every year for my services. Typically, that works out at around $500 to $1,000 a year, depending on the size of the client's portfolio. And when clients buy and sell, I get 1% commission from the dealers and auctioneers I work with. So the fees I charge to clients are actually pretty low. And I've done that deliberately because, number one, I can afford to do that because I'm a one-man company. I don't have, kids or family to worry about. So I can afford to keep my fees low. And I know already that dealers do charge high commissions. So I don't want my clients spending huge amounts of their money on commission. So I keep my fees low. And that way clients can enjoy owning these collectibles. And hopefully my aim is to build up a good client base over the next 10 years or so and, take it from there.
This is great. Geoff, I appreciate you being on here today. We appreciate you being. This is great. Geoff, thanks so much. I appreciate it. I think we'll definitely have to have you on in the future. This was great today.
Yeah,
Geoff,
I'd love to come back and, talk to you in some detail about coins or stamps or whatever. There's just too much to talk to.
Geoff, one key point, I'll interrupt for a second, that I like about what you said, up to all the other things you said, is that you think generationally. We're generational advisors. We work with families, G2, G3 generation. So this is a very interesting conversation we could have with our families, that at part of their portfolio, we could take, again, that 5% of their investable assets and diversify into those type of collectibles, and most certainly refer you into that situation as well. I'd love to have you come do another podcast with us in the future on maybe a specific collectible that you might want to dig deep on. But really, Geoff, thanks for coming. We appreciate your time.
Thank you very much for having me, John Michael. Pleasure to be on.
Gentlemen, this has been great. Geoff, I got to say that it's interesting. As you were talking and talking about these collectibles, I kind of realized within myself that my grandfather started something, or more specifically, his grandfather started something years ago in me with a pocket watch. My great-great-grandfather worked on the railroad, had a pocket watch. When he died, he gave it to his firstborn grandson, who was my grandfather. I was the firstborn grandson in the family, so I now have that pocket watch. And that started me on collecting watches because I like the mechanics. I like to watch things work, right? And so that came to my mind when you were talking about this. I believe what you do sparks interest in younger generations. So that multi-generational, the passing of it can really kind of spark some interest in something like that. So I have a small watch collection now based on the fact that I love to open up the back of that railroad watch and watch it tick and just see how the mechanics work of it. So I thought that was fascinating. And so my grandson, who I have a firstborn grandson now, he will eventually get that watch when he's old enough to understand it, appreciate it, and not play with it in the yard. You know what I mean? So I think that's great what you do. I think that that's something that a family can pass and cherish together. So I love the conversation today. John and Michael, I thought this was great. And I'm curious from your end, do you have families that already do this, that they maybe have shown you? Because you guys meet with your families all the time. Have you had families show you an interesting collection that they've got that they plan to pass down?
Yeah, we had a neurosurgeon in Oklahoma. We're visiting him, and his wife said, "You need to see Chris's wine cellar because they know I collect wine." Mm-hmm. So I walked downstairs. On the wall there was a huge glass cabinet with all these surgical tools for surgeons, for neurosurgeons. Mm-hmm. He had Napoleon's tools. He had the largest collection of this equipment in the world, apparently. I said, so what are you going to tell me that? So what are you going to do with that? So here's the conversation: what do you do with that? Geoff, the problem I had, well, who's going to want that? Who's going to collect it? So we're going to donate it to the university, I believe, where he graduated from. But anyway, there are people that have collectibles we come across occasionally. Yeah, absolutely.
Yeah, it's and it's funny because to your point, Geoff, it has a lot of value, but it's when we go through our data collection process that it's almost always the last thing that gets discussed, right? In terms of, I forgot about, this client. I forgot to tell you about this. It has value, but what's kind of interesting, because they don't necessarily view it as an investment, quote unquote. It's the collectible, right? It's not to be sold. It's not something they track, which I think fits the theme generally, but it does still have value, and it should be planned for, like Eric, your grandfather and his grandfather, in terms of, it's a generational asset that has value that should be planned for, right? So it's interesting.
Yeah.
Fascinating.
Yeah. Love the conversation, guys. Thank you so much, Geoff. Thank you for being a fantastic guest. Of course, John and Michael, thank you for hosting this show and bringing another guest to the audience. Speaking of you, the audience, last thank you always goes to you. Thank you so much for tuning in and listening to the Truth About Wealth podcast with John and Michael Parise. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when John and Michael come out with a new podcast, it'll show up directly on your listening device. And we humbly ask that you share this podcast, rate it, and leave a review. This actually does help others find the show. Again, thank you so much for listening today. For everyone at Copper Beech Financial Group, this is Eric Johnson reminding you to live your best day every day. And we'll see you next time.
Thank you for listening to the Truth About Wealth podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Copper Beech Financial Group. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.
This material is for informational purposes only. Neither APFS nor its representatives provide tax, legal, or accounting advice. Please consult your own tax, legal, or accounting professional before making any decisions. Copper Beech is not affiliated with American Portfolios Financial Services, Inc. and American Portfolios Advisors, Inc. Securities offered through American Portfolio Financial Services, Inc., a member of FINRA SIPC, investment advisory and financial planning services offered through American Portfolio Advisors, Inc., an SCC registered investment advisor. These opinions are subject to change at any time without notice. Any comments or postings are provided for informational purposes only and do not constitute an offer or a recommendation to buy or sell securities or other financial instruments. Readers should conduct their own review and exercise judgment prior to investing. Investments are not guaranteed, involve risk, and may result in a loss of principal. Past performance does not guarantee future results. Investments are not suitable for all types of investors. Copper Beech is an unaffiliated entity of American Portfolios Financial Services, Inc. and American Portfolios Advisors, Inc. Any opinion expressed in this forum is not the opinions of American Portfolio Financial Services, Inc. and American Portfolio Advisors, Inc., and have not been reviewed by the firm for completeness or accuracy. American Portfolios and Copper Beech Financial Group are not affiliated with any other named business entities mentioned.